Everyone, I'm going to be going over a good trade you could have taken today and my overall process for taking it, right? So again, as you know, my process is really simple. We first want to start with a 15-minute entry, a 50-minute kind of fair value gap, and we're using the power of three and we're looking to buy below the opening. That is step one of the model. Now that we're inside of a 15-minute fair value gap, right? The first thing to understand is that we are below the 3 a.m., the 3 p.m. opening time or 10 a.m. Eastern. And now from here, we've had a break of structure to the upside, right? So we've had a shift in the order flow because we've broken above this particular level. So we can place an entry over here with a stop loss just over here, right? And now from here, where do we target? So in terms of targets, I get a lot of questions about this, right? My first target is going to be high of day. That's a nice 1 to 5 hour trade, 1.5 hour trade, right? So if we continue to play price on, we get our first loss of the day, right? And this is what I'm going to be going over with everybody, being very transparent with this particular strategy. So as you can see over here, we didn't quite have the move we wanted. Now, the reason for that is because if we look at the session itself, right? The session itself was pretty damn rangy and we ranged even at this level. So we have what I like to call January price action or whatever. But if we kind of break this down one more time, you've sometimes in the market, you've just got to take a second entry. That's just literally how the markets work, right? So now that we see we're very, very firmly below the 3 p.m. open or the 10 a.m. Eastern, right? We can see that by this candle. So what I like to look for, this helps me kind of get out of losses, right? Notice how we've broken above, right? So we've had a very, very clear shift above. And I want you to understand one thing with this, right? You need to understand that the market will often retest that level. And it's at this retest, after you've had this retest here, you can then start to look for longs with a stop loss just below these wicks over here, or even below these wicks over here. This here now makes the probability of the trade playing out a little bit higher. And of course, if you have to take another break even, that's fine. But if we just continue to play price on, we had a very, very large rally to the upside. Now, what I want traders to understand is that taking losses is fine, especially when you have such rangy price action inside of your level, right? One way to avoid losses is to keep the risk low and also ensure that you're trading with this power of three indicator below the 10 a.m. Eastern time.